million, 2 million, 3 million. Give me feedback if you can hear me. 1, 2, 1, 2.
all about experience. It's to feel the adrenaline running through our veins. Like all the things we do that excite us. Whatever world we come from or live in, there are people that are born to succeed. They're called special, to hustle every day for an opportunity of a lifetime. Looking for the challenge to shape our future is something that's in our DNA. A privilege just available for a few. Traders, we see things differently, paying attention to every small detail that would maybe go unnoticed by the common eye. On or by the edge is our playground. With a constant strive for glory, seeking for a new tomorrow. Do you feel special? Take back control of your investments.
Hello, hello, good afternoon.
Hello, good afternoon.
Can you hear me? 1 2 1 2.
Yeah.
Excellent. How was your morning?
What is your view on gold if Fed increases 50 bps?
Say that again, Saurabh.
What is your view on gold if Fed increases only 0.50 pips?
Excellent question, because the whole market is talking about the rate hike tomorrow. Saurabh, quick question to you. Have you watched the morning briefing on the website?
Yes. For 0.75 I have watched.
So what did I say about the possibility of the rate hike?
On 0.75 gold can touch 1600 within minutes.
That's what I wrote in Discord, but on the website, if you check, and if you participated in the morning briefing, I explained everything.
I have not saw this. I have only saw the XAUUSD analysis on Discord group.
All right, so you're just checking the analysis, and you said that you watched the morning briefing, but you haven't. Cheeky. Okay, let me explain to you, Saurabh, what's going to happen. Okay?
Okay.
So, let me just quickly check on... Can you hear me? Can you see me? Okay?
Yes.
Yeah.
Okay. Quick question to YouTube. Why the fuck we have only 113 likes, guys? In the next few minutes, what I'm going to deliver is pure knowledge. So hit the like button if you want to participate. Anyway, so Saurabh,
Yes.
we know that this week there's going to be an interest rate increase, right? It's going to be tomorrow, on Wednesday, right?
Yes.
Okay. Do you know what does the interest rate do? Why are they increasing the interest rate?
Yes, due to inflation.
Yes. So one of the ways for central banks to fight inflation, the most aggressive way, is increasing interest rate. And why do you think they're going to increase interest rate?
To counter inflation.
Yes, but how does it combat inflation? Is it just some magical string that they pull and inflation is going to disappear? What is the effect?
Not a magical pull.
Okay, so the effect of the interest rate increase, that they're going to discourage companies and individuals to borrow money, because they're increasing the interest rate, also known as the borrowing cost. So if the borrowing cost is increasing, people are less likely to take out bank loans, mortgages, consumer loans, i.e. the money circulating in the economy is going to reduce. And if something is reducing, something there is less, that's going to dampen inflation, right?
Right.
Right, okay. So,
But I want speaker.
right, I will find the noisy one and mute. But anyway, so if they're increasing interest rate, and do you know why they want to increase interest rate? Because you said already that inflation is high. So the inflation reading last week was on Friday, yes? Do you remember how much was inflation in the US?
Yes, 8.6.
Very good, very good. 8.6, which means that we haven't had this high inflation since when?
40 years.
40 years. Well done. Excellent. So I won't even go into the data. I will show it later. So And what changed since last week Friday when the inflation reading came out? Because yes, everyone knew that there is inflation, and inflation was only higher, 0.3%, as opposed to the forecast, 8.3%. So what changed since Friday? Why is everything else selling off on the market?
Just only because of Fed interest rate.
Yes, but there was a crucial change, because many people now considering an increase in the rate hike. How much was the original rate hike, the planned? How many basis points? 0.5, so half a percentage point or 50 basis point, depending on which way you're measuring it. And what changed since the CPI came out? How much did it increase?
I have no idea about that.
0.75.
4.75.
Yes. So what changed since last week is that the Fed is now expected to increase interest rate instead of 50 by 75 basis points. That is what the market is talking about. That is the word on the street. And economists are now forecasting 95% of them saying that the Fed is going to increase by 75 basis points because inflation is just way too high. The question is, are they going to really do it? But before we get into this question, let's have a look. When was the last time when the Fed increased by 75 basis points? So actually, I'm going to go to this chart right here. Can you tell me, or someone tell me, when was the last time the Fed increased 75 basis points?
94.
94. Damn right. How did you know?
Morning briefing.
Yes, well done. So the last time when the Fed has increased interest rate by 75 basis points was back in 1994, 28 years ago. Anyway, ages ago, long time ago. And before that, it was back in the 70s or in the 80s. So 1994, 27 years ago, the Fed didn't increase interest rate by 75 basis points. And it has a crucial meaning. Now, since 1971, we had 184 interest rate hikes and cuts, 184. And out of this 184, half of it, around 90, was less than 25 basis points, and only 18 or 20 was 75 basis points in the past 51 years. So it's quite substantial that the Fed is coming out and saying that they're going to increase interest rate by 75 basis points. And yes, there is a possibility that they're going to increase, but how much is the probability and the possibility? In my opinion, if you look at the data and what's going to happen, the Fed carefully prepared everything the past 4 months to spoon-fed the 50 basis point rate hike. They had to spoon-feed it for months and months and months. So it was an orchestrated, not an attack, but it was like, oh, Benson. So it was a orchestrated, it was a planned. So months and for weeks, they were spoon-feeding us with the statements, with the interviews, with everything that, guys, be ready because we're going to drop the bomb with 50 basis points. And now everything changed because now they stepping up the game. They want to step up the game with 75, but the problem is it would be too quick. That would really, they would lose, how to say, the trust. Market will lose the trust and the credibility if they increase by 75 basis points. There is a possibility, but in my humble opinion, and you have to, you either digest it, you take it in, or just, do whatever you want with it. But in my opinion, if they increase by 75 basis points, that would be just way too fast for now. In July, absolutely yes. July, August, September, even I see 3 75 basis point rate hikes. But this quick to change within 3 days or 5 days, so since last week Friday to this week Wednesday, which was Friday, Saturday, Sunday, Monday, Tuesday, Wednesday, 6 days or 5 days, to change the months of communication suddenly and increase it to 75, I think the chance is really, really tight. And the reason why, oh Manjeet, please mute your mic. So the reason why I'm saying that and why yesterday there was a massive sell-off is because gold has now, and every single asset class has now, a direct competition in terms of treasury yields. Now, 10-year treasury yield is currently running at well above 3%, and you can see I plotted on the chart, I try to show it to you, that by how much. So this massive gap right here, this is an overreaction, and I think, yes, the market has priced in a 75 basis point rate hike, but if the Fed doesn't go ahead with 75 basis point rate hike and only increase the interest rate by 50 basis point, this gap is going to go down. And if you look what happened the last time, and the Fed started, when the yield started dropping, that is a green light for gold to go sky high, but it's not the time today, in my opinion. Because if the Fed is going to go ahead with a 75 basis point rate hike, gold is going to melt down to 1700s, even 1600s, but that's a long shot. But if the Fed goes ahead only with 50 basis point rate hike, that's the only opportunity I see a nice fly in gold. But anyway, that's enough from the economics. Do you have any questions about how yields, interest rate, and what is happening on the market?
No.
All right. I hope you understood it. If you have any questions, feel free to ask. Right now, the markets and everything on the market is dropping. If you look at the, stock markets are in a bear market officially because they lost more than 20%. Well, ages ago, Nasdaq lost 30%. But right now, everything is going into a bear market. Everything is selling off, including gold, crypto, currencies. The only thing that is flying is oil, one of the commodities, and I've been calling this for months, that oil is going to go up, inflation is increasing, prices are going up. But anyway, and the reason why everything is dropping, because if the Fed increased by 75 basis point, how is it going to affect the market? Do you know that, Saurabh?
No, not have an idea.
So imagine that you're an investor, you're a trader, you have big money in your pockets, right? You're one of the best in India, the wealthiest man. Where would you put your money? You have 3 options, or even 4 or 5. The first one is, that the Fed is going to increase interest rate, the borrowing cost, by 75 basis point, which means that the yield on the 10-year treasury can easily reach 4%. This week or next week. So you get a guaranteed 4% return on one of the safest investments, US government bonds. That's the option 1, right? Guaranteed 4% return. You can go to the stock market as well, which is, it has seen better days because it's been selling off whole of 2022. If you look at the Nasdaq, it lost year to date. Let me show you. Year to date, the Nasdaq has lost 32%. Is it a good deal? Good investment?
Yes.
What, losing 32% is a good investment for you?
No, at current price, it is a good investment.
No, forget it. It's not a good investment. God, don't go to the stock market. So what I'm trying to say is that the options are very limited now for investors. And remember that investors are chasing yields. They want the alpha, the ultimate abnormal above average return. And right now, nothing is offering as good returns as the possibility of the 4% government bonds. And if they increase the borrowing cost by 75 basis point, the yields are going to follow. And if the yields follow, everyone is going to the fixed income market and start buying bonds. It's going to send gold down to the hell. The stock market is going to sell off. Crypto is already hammered because it's crap. Do you understand now how it's all interconnected?
Yes.
Very good. Excellent. So, starting with gold on the higher time frame, because YouTube is going crazy. And right now you can see that I explained everything about the fundamentals. And the problem is that until tomorrow, if you don't know, because it's just a guessing game now, because we don't know by how much they're going to increase interest rate tomorrow. My bet, they're going to go ahead with the 50 basis point, but the market is pricing in 75. So there is a gap between expectation and forecast. if they go ahead with the 75 basis point, everything is going to sell off. No question about that, even gold. But if they go ahead with the slightest possibility that they go ahead with the planned 50 basis point that they spoon-fed us for months and months and months, like Bullard, Loretto Mester, Jay Powell, all the voting members of the FOMC, they have been practiced a beautiful statement every single time they gave an interview that talking about how hawkish they are, they're going to tackle inflation. It's been going on for months, and would they sacrifice everything to throw out months of work into the bin just to get, discredited by the market that they changed the word? No, I don't think so. I think that's the reason why they're going to go ahead with 50 basis points. Benson, you're going to the waiting room now. Fuck off. So they're going to go ahead with 50 basis point, and if they go ahead, that has a potential to push up gold just intraday, but in the longer term, gold isn't looking good because now we reach into the territory where there are better yields, better investment opportunities on the fixed income market. And if you combine the macroeconomic analysis with the technical analysis, what do we see on the chart right now? You can see that there was an ascending channel which broke yesterday or today. It had the retest, and now it's trading below the weekly pivot, below the daily pivot, below the ascending channel, and below the previous weekly low. So everything points into the direction that gold has further downside potential. And what would be the best profit target than the previous monthly low? You can see it's beautiful. It's back to the under 1800s. So right now, because macroeconomics, yes, it does point to that direction and also lines up with the technicals, or technicals line up with the macros because macros are stronger. In my opinion, it's time to sell gold now. But the problem is that what if there are some dip buyers? What if the Fed is only increasing by 50 basis points? That has the potential because gold always reacting to Fed interest rate hike by a massive sell-off before the actual rate hike. And when the rate hike happens, gold is going to the moon. But there's only to a limit when gold has more profit potential than the yields on the actual fixed income market. So it's a bit tricky. But what I see the possibility, and here is scenario one. Listen up carefully, guys, and I want you to press the like button right now if you want to continue. I will continue now anyway. So if the Fed, or actually gold, will start selling off before the rate hike, and when the actual rate hike happens, and if, only if, they are going to go ahead with the 50 basis point rate hike, it has the potential to send gold back to above 1800. So it's already 600 pips to the downside and to the upside, but only if they increasing with 50 basis point. If they're gonna go ahead with the 75 basis point, I have some bad news for all the gold traders. But is it really bad? Because we can go short in the gold market, so it's not really bad. We see potential opportunities, but even back to 1750 is now a probability which is down 600 pips again. So it's tricky because we don't know how the market is going to react. We can only speculate. The last time there was 75 basis point rate hike was back in 1994 with not similar market conditions, bear in mind. So enough of the macros and technicals. I'm getting a little bit dry now. So what I'm seeing now is, because we trade below every single technical levels, there is a good opportunity to sell right now. I wouldn't hold high hopes to buys, but there's always two sides of the market, because let's see, what do we have in the economic calendar today? I think we have something called the PPI in the United States of America, which is another inflationary measure that is actually the core PPI and PPI, which is the, how to say, the alpha of inflation. Producer price index. If the producers are increasing prices, that's going to affect the middleman, the wholesaler, the retailer, and then your wallet as well. So actually, before the CPI, prices has to go up somewhere, right? And that is the PPI, the producers, who's producing the goods and services, who putting the goods into the basket of consumer goods. Oh, Kevin is in trouble. But going back, for until we have more confirmations, I think the sell-off is going to continue. We are in a little sell. It's running in 5 pips profit, maybe. It's not too much, but I would advise anyone just to observe the market, because it's tricky now. And I see many comments on YouTube that yes, you can look at the technicals, but honestly, in this environment, how confident you are that your trend line and your support level is stronger than the words of Jay Powell, one of the strongest men on earth. Any questions about gold?
Yeah, I hate it today.
Yeah, I already asked the question from the team this morning. What is the difference between risk and uncertainty? Risk can be measured. Exactly, but uncertainty, you cannot put a number on it. You cannot measure uncertainty. And that is a problem, that since there was not even a question, the 75 basis point rate hike from the central bank, the Federal Reserve of the United States, there wasn't even a question about it in the past few months. There was one comment about the possibility maybe in the future in September. But now, within 5 days since the CPI data printing, everything changed, and 94% of the economists on Wall Street are expecting a 75 basis point rate hike tomorrow. How crazy that everything went to the bin and how fast things changed. It's just insane, the speed, the change. And I still don't believe they're going to increase 75, but anything is possible in these market conditions. What do you think about gold? Is it going to continue to drop? Is the PPI reading going to push up a little bit? I want to see some ideas, some thoughts.
Technicals, it's gonna bounce back a bit up, but as you just said, Thomas, technical, I don't think it will be validated.
Yes. How about if I give you a scenario? How about that we have the PPI data printing coming up in less than 10 minutes. So this is PPI more month on month. What if the PPI is going to push gold back up to create us a nice W pattern, maybe? Because PPI is still strong. It has the potential to make another lower high. So you see how we get here. We start with the macroeconomics. We looked at the fundamentals. Now we opened up the economic calendar. We have a tradable news and event, and now we can start speculating. And what do we see on the technical side on the chart is that we had a low, we have a high, we had a lower low, which is followed by what?
Lower high.
Damn right. A lower high. So now we have a probability on the technical side, which I think it's, we can capitalize on it. But it's only speculation because you don't know what the number is going to be. So I would stay in sell, and if it comes a little bit higher, I would sell even more. But if inflation is just way too high, like 10% or 11%, that has the potential to reverse wipe out the sell-off yesterday and go higher. So it's just crazy now.
I think it's better to stay aside.
Yeah, it's not as easy. How easy was last week's CPI trading? CPI was high.
It was easy.
Yeah, it was freaking easy, free money. But now that you see, we have many things we have to. Oh, Irfan Khan, just 1 second. If you comment one more copy paste on YouTube, you're going to be blocked. But anyway, so that was an easy day, and now there was just one number we had to look at. CPI is higher, buy gold. CPI is lower, sell gold. But now we have to factor in one of the toughest macroeconomic things in the world, because we haven't had 75 basis point rate hike in the past 27 years. We haven't had 8.6 inflation in the past 50 years. We haven't had these market conditions lining up, supply chain issues, high inflation, tight labor market, and the list goes on. We haven't had them since 70s or 80s. And just way too many things to focus on. How can you make sense out of this? Even the most seasoned and trained economist cannot make a sense out of this. How do you expect yourself to do anything? I would just step aside, let the market bleed out, and when the time comes, when we see opportunity, we will step in. We had, even if you trade 1 day a week, 1 day a month, just CPI, how much money you made last week Friday? Just out of curiosity, give me some examples.
I made 4%.
In money terms now.
In demo, I've done $80,000. In real life, something like $250. Because I have
200
differences.
Yeah.
Yeah.
$250
around $200.
200,
That is
250.
Yeah, at least that is around 10% of my account.
Me too. 10% of the account. Yeah.
Okay, so we see 200, 250, 1,000, 2,000. You see one single trade a month. If you sit patiently and when the opportunity is coming, some people said 500. These are monthly salaries in some countries. Yeah. Why would you give it back in some of the toughest market conditions in the world right now? You'd be crazy.
Yesterday I lose all the profit from Friday. Because of
was I trading yesterday?
No.
Oh, man,
what did I say in the What did I say in the morning?
That you don't recommend them to give back the money. I know.
That's what I exactly did. I stayed out, traded very small lots, just for the fun of it. But as Thomas said, I don't want to give back my money to the market and to keep it.
Yeah, you need that money in the future. You need to withdraw that money. The only profit is what you withdraw, what's in your pocket. You make the money, take the money. Don't give it back. And right now, market conditions are tough.
Even though, like yesterday, that I lose money, from the day I joined the group, I lose less money every time. My entries and stop losses become better and better every day. Also in the demo and also in the real account. It's okay to lose from time to time. It's not all the time only winning, but again, losing a lot less. I think it's the correct way to say it. And thank you for that, Thomas.
You're welcome.
Thomas, hi.
Hi, Margaret. How are you?
I'm good. How are you?
Very good. Good to have you here.
I want to ask you about US30. Is it gonna retrace up?
Oh, where should I know? I'm just, a person as anyone else. But, you guys, there's always dip buyers, always. And this impulse move that we traded last week, this is a massive impulse move. This was like 4% that we cashed every single pip of it. You remember, many people made money on this when I showed this. And right now it reached a support level, so purely focusing on the technicals, yes, it always has the possibility to bounce up, and every impulse move has to be followed by a retracement. So all you have to do is put the Fibonacci. But what is the guarantee it's going to retrace? In these market conditions, there isn't, and we're not in normal market conditions. The Fed, the markets went crazy yesterday. Yes, it can retrace, but would I put my money on it? No, I wouldn't. No, I wouldn't. It's not the time. It's. I wish I could give you a straight answer, Margaret, but right now it's. The Fed just came out the probability that they might raise interest rate by 75 basis points, or some idiot started on the street. So I don't know.
even though there's a gap there.
But Margaret, don't ignore the gap. I could change to another market data provider. I'll show you. US 30, Black Bull broker. Yes, there is a gap as well. But if you change the brokers, if 3 or 4 brokers has the same kind of gap, that's the only time when it has a gap. And in this market condition, when there is a probability the Fed is going to increase interest rate by 75 basis points, I wouldn't even bring in these kind of things, because this is like really simplistic. And what is stronger? That the strongest economy in the... Yes, absolutely fundamentals. So in these market conditions, trend lines and all of these things, I only can confirm the macroeconomic theory.
Okay.
But I wouldn't place more emphasis on technicals rather than fundamentals. Absolutely not.
2 minutes.
Thank you, Ivan. How are you?
Thanks, Thomas.
I'm fine, thanks.
Hey, Mr. Vasim just joined us. So anyone who's looking for some juicy, nice sniper entries and, you know, want to buy Lamborghini overnight, it's not the best day to trade. I would just observe. Yeah, guys, especially Margaret, like yourself, you new trader. I would not trade what you think or see on the market. I would just observe and learn. Margaret, how many trading days we have in a year?
More than 250.
Is your name Margaret?
Oh, my mistake. Didn't hear the name. Sorry.
No problem.
Sorry.
So we have 365 365 days in a year. Out of that, 251 is actual trading days. So we halfway through 2021, so you had still 124 days to trade. Just to give you a perspective that, you know, you're not late.
Okay. Thanks, Thomas.
Thomas, you know something? When I just
joined... Whoa. Hold on, Yoni, hold on. Inflation is out, and it's better than expected. On core PPI and PPI, it's slightly better than expected. It's not good, but it's better. So let's see how gold is going to react. Oh, Irfan Khan, you idiot. So, core PPI, which excludes energy and food prices, which is the two most volatile in the market, is... let me just delete the things. Okay, so... core PPI... Where is it? Right there. So core PPI is slightly better than the 8.6% forecasted. So it's already started to decrease. But the PPI, which including energy and food prices, is in line with expectations. So in theory, in my opinion, that should have a slight push to the upside. But in reality, we still have the 75 basis point rate hike tomorrow, or the probability of 75. So let's see how it's going to affect the market. What do you think, guys? Does it have enough juice to push gold back into the ascending channel? Is it going to be a valid support level?
I think yes.
I think it's gonna retrace back up.
Oh, yeah, it has a big gap to fill, as Margaret said. Impulse move followed by retracement. So now we're just observing. Let's see again. Who's in a buy?
I am.
I
Small one.
Mm-hmm. All right. I think because inflation, is still with us. Yeah, I'm too chicken to buy in.
Stick to your plan.
Buys were good at Asia session. I had a buy limit yesterday at 1812. Was triggered.
Oh la la! Well done, Ali Khan, Ali Mansour.
Yeah, that was the best entry, I guess, at that time. But in the current range that we are in, too tricky.
Yeah. Do you see mixed confirmations, bearish and bullish?
The breakout through the channel definitely is bearish.
Yeah.
But with the economic situation, I'm not sure how it's going to be. It's going to be definitely with the decision tomorrow coming also. I
dialed in this morning to the banks where I used to work as a risk manager. I dialed into the treasury meeting this morning. As literally as many people we had in the room, we had opinions as the number of people in the group. But it's you can separate it into two parts. People who think that yes, they're gonna go ahead with a 75 basis point, and they were bullish on many of the assets, or bearish, and you know the other half they see bear market. So bulls, gold bulls. Give me a setup. What if I miss the entry and I want to enter now based on the okay inflation data?
Just make your lot size smaller and the stop losses bigger.
Oh. Okay.
I don't think it's good for buys.
You think it's good for sell?
Yeah, when it goes up. Just wait.
Yeah. You see, many people just see different things.
Just wait at 1848 maybe.
1848 for sell, right?
Yeah. It's just retracement.
Well,
yeah, if you look at the technicals,
the support level 2 times, even though with the other wick on yesterday, and we have a diversion on the current
the RSI.
Yeah.
So what do you think, Marwan? Is it a good buy?
I'm testing it, small lot.
Yeah, with small lot, I'm entering into small buy.
Yeah, you can have a tight stop loss at 1816.
Give me a stop loss, 1816.
Yeah.
Okay. Where should I take profit, Marwan?
2,500. No, target the second, the first
pivot
support, 1839.
1839. Yeah. All right. There you go. So today's analysis delivered to you by our very own Marwan.
Wow.
He's a petro engineer. And there you go. One whole standard lot placed based on Marwan's analysis. This is only an intraday setup, so this is not a long-term view. And you know, Marwan cannot be held responsible if you make any losses. I will share his email address and full name and address, you know, later.
Who needs enemy, huh?
When you have friends. All right. So Jinxie says that when in doubt, just stay out. Absolutely agree, but you have to understand that we're doing a live stream, so we have to do some show as well. And you know, it's only one standard lot, so even if I lose, that will be £435, which is reasonably less than my capital. So I think it's fun to test it sometimes, when you can just let it go and say, you know what, fuck it. I wouldn't do the same one, you know, full lot or full margin.
Thomas, you talk about it now, and I wanted to say something before. Before I joined the group, I searched in the internet for a lot of guidance and instructors for trading like we do. And the difference in the group, that it's not only for, you know, when to buy, when to sell, or just something like this. All the community, talk how to accumulate, how to add to your knowledge, how to trade correctly. And when in a day, like you say yesterday, don't trade today, don't give the market back your money for Friday. And you have the experience, and a lot of people in the community have the experience also to know when not to trade. And it's very difficult for a new trader like me that see the market structure or the movement and thinking about something that's going to be, or hope for something to be, and in the end loses money. And also the timing on where or what, it's very, very important. And the help of the community for me was amazing. For me.
Thank you very much. You're welcome. You're welcome. Thank you. So, yeah, I do agree that, you know, people should learn when to trade, when not to trade. Unfortunately, you know, when you want to do a live stream and you want some views and attention, you have to place some trades. But I want to highlight, Leonie said exactly well, if you're not too short, don't trade, because it's not the perfect market conditions. And I explained at the beginning the full economics and macro stuff. I hope you enjoyed it and learned a few new things. But overall, anything is possible right now, because if the Fed is really going ahead with 75 basis point rate hike, that is going to send the whole world down to hell. Gold, crypto, stock market, currencies, you name it, everything's going to go downhill. If they go ahead with a 50 basis point, now that we have a chance that gold is going to bounce up, because then we're back to square one like last week. I don't know what's going to happen, but overall, now we start turning into a bearish scenario for gold, because the yields on the bond market is now giving better and more reasonable returns than just a piece of metal and cryptocurrencies and stock market. And, you know, overall, we will see tomorrow. But if you're not too sure, just observe and enjoy the stream. Sit back, relax, and enjoy the flight.
I need a recommendation for a new book, because I finished all of the books that you recommended.
I ordered some books
yesterday.
I need to check my email. Hold on. I'm always afraid to open my Gmail or my email address when we're doing a live stream, because then I'm afraid that people are going to see my emails. Rom from YouTube, love you, boss. Love you too, man. Liked already. So Kazitop says, you said better than expected. Yes. Better than expected. I think he's talking about the data that just came out. Yes, slightly better than expected. But, you know, it's still worst. It's still bad, because if you look at the data, that's another thing you guys need to understand, how to interpret the data. Economic data. Better than expected in terms of inflation, slightly better than expected. Is it really better when we have the Fed target rate for inflation is 2% and the core PPI, the core PPI is 8.3%. So 4 times the Fed target rate. And just because we have a slightly better than expected number, is it really better? No, because it's still 4 times the Fed target rate. So inflation is still there, which can push gold a little bit higher, hopefully today, so we can catch some pips. So you need to understand how to interpret this data. So the first book recommendation, I'm not sure what whether these are good books or not, but they are really, really promising. So the first one is Deficit Myth by Stephanie Kelton. He is a leader, thinker, and most visible public advocate of modern monetary theory. Let me show you the picture of that. It cost only, you know, £8, $10 or something, so it's not a big money. I'm not sure how good she is. I never read any books from her, but apparently it was a top seller. And you can read about it. So the first book recommendation is Deficit Myth. The second one is Almighty Dollar. Almighty Dollar by yes, Almighty Dollar book. This one right here. David Darshini, The Almighty Dollar. Follow the incredible journey of a single dollar to see how the global economy really works. Now, I think this will be, if it lives up to the expectation, I think it will be a really good introductory book for you guys to understand the currency market, monetary policy, and how the dollar became one of the strongest currencies in the whole world. And yeah, these are the books, Yoni. And ATS is asking, Thomas, please say something about Bitcoin and Ethereum. Sell it as soon as you can. Thomas, you still trade gold and old school. That's why I lose. What's why you lose? You should look for new signal to entry correctly. Oh, thank you so much, Zico. Yes, it's really old school because I was educated in economics. I did my degree and I used to work in finance. So yeah, maybe I'm too outdated now, but I guess you have a holy grail that you can show to me. What do you think, guys, about Zico? He says I'm too old school.
He must have a time machine because he knows what's going to happen. He's just one of those guys with a crystal ball and a time machine. You can't compete with that.
No, I can't. I'm sorry.
Old.
Yeah, I know I'm old. I'm not that old. I'm not like Raul. Yeah, old but gold.
35ish.
Yeah, I will. I'm 34 still. Hold on. Don't rush ahead. I'm not as old as Raul.
You're still young, man.
Yeah, I am.
Yeah, I'm 45.
Whoa, 45, man.
That's the prime age. You know, still hard and strong. Strong and hard? Yeah. That doesn't sound good.
It's a Jerome Powell kind of conversation we've been having online.
Yeah.
Semi
So,
hard landing.
yeah, that was hilarious. So actually, the Fed was talking about soft landing for months, that they're trying to achieve soft landing with the current monetary policy. Now, soft landing by definition tells us that soft landing is when the Fed starts increasing interest rate before the inflation gets out of hand. So by definition, they already failed when they're talking about soft landing, because when they first came up with soft landing concept, inflation was already at 7%. So they were already late. And last week, Jay Powell started talking. Last week, Jay Powell changed it from soft landing to softish landing, and we had this discussion that it's so funny that every single week he's changing his commentary and description of how they're going to soft land the economy and what's coming next week. Is it going to be semi-soft landing and, you know, just tepid, or semi-hard landing? Come on, make up your mind.
Where is the one that called you all the fashion? Is in the YouTube?
Who?
say Z something. So told you that you're old-fashioned.
Yeah.
It's from YouTube.
Let him show us with results how updated he is if you are old school. Yeah, I do agree. If, many people comes to the channel and saying, they come here to express their opinion. But the problem is that I'm the only one who's actually giving streams every single fucking day for the past 6 months. So, credibility is something that, I can show up. Because many, almost over 500 people watching the stream every single day. Guys, we trade live trade almost every single day. If they put it out there, they're willing to talk the way I do. They don't have to be economist, but give me a logical argument, a deduction, a reasoning that I can argue with, because saying that sell gold now, you're an idiot, or your technique is outdated is not an argument. And one thing I realized that these people, stupid people, are afraid of one thing. They're afraid something that they don't understand, which is knowledge and common sense, unfortunately. And no matter how hard I try to argue with idiots, it's like playing chess with a pigeon. They shit on the table, they wipe off all the things from the table, and then they walk like that they won. It's impossible to argue with them.
It's very easy to criticize, but it's the hard work and I don't think they can do it.
No, it's.
I think on YouTube you are one of the most profitable YouTuber that I saw in any markets, and I used to watch like 7 or 8. It doesn't matter if it's crypto or the US, or it doesn't matter. I saw you for 3 months before I joined the community, and from the day I joined the community, I think if you count it in pips, you have like 10,000 pips from the day I joined the group. And if the numbers don't talk, so people don't need to join the YouTube and watch and give us the unpleasant comment that they usually give.
Yeah, so thank you so much, Shoni. I do appreciate it. We have one question from, who was that? Fun with Fogat. I'm not sure what does it mean, but if you want to have some fun with Fogat, message him in DM. Well, he's asking that, Tomasz, how is the data affecting the DXY? Now, DXY is the dollar strength index, which is made up. Who knows how many currencies are measured in the DXY index?
No idea.
No idea, but I've seen many people they going around and talking about DXY is up, sell gold, and they place the whole strategy based on dollar strength, but they don't even understand that what does the dollar strength made up of? What is the how many currencies are there? What is the composite?
So mostly euro, Great British pound, some yen, and I'm guessing some Australian dollar, but I could be wrong. But
yes.
Those are mainly euro, pound, and yen, right?
Yeah, so the first thing we need to understand, what is the DXY made up of? And 57.6% is euro. Surprise, surprise, mother tuckers. And then we have some the Swedish krona, Swiss franc, GBP, Japanese yen, and Canada as well. So when you're measuring when people talking about the DXY and try to see a correlation between gold and DXY, you need to understand that if the euro, which in sometimes doesn't correlate with gold, if the euro goes exactly the opposite direction, it's going to affect your tradability. And I show you how. So we have the DXY on the chart, right? I'm going to put it on a line chart to make life easy. And then we can do a simple correlation analysis, and I show you this for everyone. So pay attention when you want to do a correlation analysis. This is the simplest form by visualizing the chart. You can combine two charts together by going to DXY first. So you see the dollar index right now. You right click on the asset you want to trade or you want to measure, or the correlation, which is gold. So right click on gold, then you go into add gold to compare, and suddenly it brings the two charts together, but it's a mess. you cannot make any sense out of it because it has only one scale on the right hand side. So first you need to normalize the data. The next thing you want to do is click on the newest data which appeared on the chart, is the red line that is measuring gold. I'm going to change the color into, you know, this is going to be yellow, this is going to be gold, and DXY is going to be maybe blue. Yeah, let's make it blue. DXY is going to be this ugly blue. No, this blue. DXY is blue, gold is yellow. So if you want to normalize the data, click on right click into gold, the yellow one, and you go down to pin to scale now, right? And pin to scale or pin to new left scale. So it puts the data into the left scale, and now you have a much smoother, easy to understand data, and you can measure up the correlation because it normalizes the data so you can have almost identical, or it's on the same level playing field, because DXY is going up to 100 but gold is going up to 1900 or 2070. So the correlation between DXY is gold. Yes, sometimes it's really nicely pivoting from each other or negatively correlated, but sometimes they really do move together in it. Sometimes they indirectly correlated, but then it's moving sideways, gold is moving down. So the problem is that sometimes the DXY is more aggressively selling off, but gold doesn't reacting as heavily. Even though the dollar is cheap in these times when the dollar index is going down, it doesn't mean that investors are actually going to jump in straight to buy gold, because, you know, maybe they're just going to hoard up some cash or whatever. But sometimes, you know, correlation is not causality. That's the main point I want to put across. So be careful when you building up your strategy on dollar strength. But any questions, feel free to ask. And now let's go back to the gold chart. So this was a simple representation about how can you measure up, how can you do correlation analysis and visualize. Let's see, what were the comments?
Okay. Thomas, a generic question.
I married and I like girls.
You know, okay, and then what? They added 0.75, and then we went into a recession. And then what? What will happen? Everything will crash, and then what?
You have to look back into previous recessions. So it's going to have a slow bleeding out knock-on effect for many years. And you have to pick something that I can understand, that I can explain. What is going to happen with what? What's going to happen with stock market? What's going to happen with lower income households? What's going to happen with stock market?
Yeah, let's say US 30, for example. It will crash. It will reach what? 20,000, 21,000, 25,000?
Yeah.
And then billions of dollars will be vanished from the market. People will be losing all their savings.
Yeah.
So how then we will recover? How long will it take? I think it's going
to take 3 to 5 years.
No, it's, imagine that, you know, if things getting really bad, what is the first thing? Who is going to be the first one to come out and do something on the market?
The Fed.
The Fed. The Fed. Government is separate. Government doesn't deal with monetary policy. They do with fiscal policy. You know, they're going to start pumping money into the economy if things get really bad, or paying checks to people. You know, it's fiscal, but this is monetary. So yes, J. Powell already said that, you know, we have to bite the bullet, and it's going to hurt lower income households and, you know, the economy. So it's like when you have chicken pox, you're going to take your children to another children who has chicken pox just to get infected. So they bite the bullet now in order to avoid stagflation, which is a longer term slow growth and high inflation period. So if they want to avoid longer term, like 5-10 years of stagflation, they have to push the economy into a recession now by increasing interest rate. And what's going to happen if they push the economy into a recession? Many jobs are going to be lost because many companies will not survive. They only have cash flow enough or savings enough for 2 months. And that's a long time. Many businesses don't even survive for a month. Good companies, yes, they might have some cash stacked under the pillow for 4, 5, 6 months. They're going to get some government subsidies, the bigger firms. Small businesses will go out of business. Lower income households, the disposable income is going to be non-existing. They're going to cancel out Netflix, they're not going out restaurants. Restaurants going to have less income, they cannot pay the waitresses and waiters. So it has a knock-on effect on the whole economy. But in the end, the Fed will come back and say, okay, so maybe we raised 2 or 3 times 75 basis points, the economy is in a deep shit. Now we're going to reduce. And that's going to motivate the market to, lower the interest rate. Many people may see, okay, so I don't really have money, but now the Fed reduced the interest rate and my local bank is actually reducing because they're following the interbank lending market. They're reducing the mortgage. Maybe it's best time to remortgage my house. Maybe it's best time to take out the consumer loans. So now it starts again, and they're going to kickstart the economy by, again, easing the minimum reserve requirements on banks, reducing the interest rate, therefore increasing the money supply. So, and then the government can step in to help as well, because government is the other big market player. But what is going to happen, it's hard to tell, short and long term. But that's one scenario I explained.
Thanks, Thomas. Thank you.
Yeah, it's tough. It's not easy to explain. I think, because how long is a recession? 1 month, 2 months, 2 years?
I don't think it won't be less than at least 6 months to 1 year minimum. Just to
We're
people
talking
start
about
realizing what's happening.
Yeah, a monetary policy, just to give you an example, that every change the Fed does takes about 12 to 18 months to have an effect in the economy. So the pandemic problems already, we really start to feel the pressure that, they increased the money supply back in 2020 and 2 years later, the inflation kicked in. How shit is that? 2 years for inflation to kick in. We didn't have inflation officially for 10 years since the financial crisis. If the Fed does something today, I think it's going to have effect next year maybe.
Yeah.
But the problem is that, is it really the Fed that's going to reduce inflation? Or is the data that we compare only month to month and year to year? And if we compare inflation, for example, inflation starts to decrease by 0.1% from now on every single month. So a year from now, it should be at 7.4%. So 1.2% lower. But if you compare it year on year, that's already a big decrease. If you compare it month on month, it's going to be tricky. It's like falsifying the data, because inflation is still there. But if the Fed is really want to cheat with inflation and say push it back to the 2% level, they can do so by just cooking the data, even though inflation is going to stay with us for years.
Yes, that's straightforward.
And wow, I got a little bit tired. I explained a lot, and even be messaged on YouTube that I've missed it when you go beast mode in your explanations. Yeah, I do get carried away sometimes.
Because you're passionate, with what you do, so that's why.
Yeah, I do finance shit, innit? Bruv, cuz. So Vasim Ali is asking that, he just joined the group, so welcome Vasim, salam alaikum. He's asking that, what is the US 10-year treasury yield? How does it work, and how does it work with gold. Okay, so the simplest form to explain 10-year treasury yield is the yield on the 10-year US government bond, where the government, it's an IOU. So the government is promising you that they're going to pay back. So you give money to the government by buying a bond, and the government promises, okay, we're going to give you back this money plus interest. So actually, you know, you've heard the expression time is money, and you can calculate the future value or the today's value of futures money, and is defined in the yield, in the borrowing cost, interest rate. If the 10-year treasury yield is, let's see, what is it today? As the 10-year treasury yield right now, which is at 3.326%. That's the current 10-year treasury yield. So that's how much interest rate the US government gives you for 10 years. And a bond has many characteristics. It has a price, it has a yield, it has a maturity, and a coupon payment. And price and yields are moving inversely. So if price goes down, yield goes up. If yield goes up, price goes down. And imagine that this is another asset. Governments need to make money, right? Treasuries are issuing government bonds in order to get money because they have sources of income, for example, taxes, for example, exports, VAT. You get taxed on your salary. That's one form of income for the government. Government is like a business, but they can go out to the debt market and they say, okay, give us your money, we're gonna give you some return. So they go out to the debt market, they issue bonds, they promise you to give back some interest, and now, boom, they have managed to get some money. And therefore, this asset is a direct competition for gold and to stock market because it offers a return, right? If you give money to the government, it gives you return. If you go to the stock market, it may or may not give you return. If you buy gold, well, it may go up. So directly, we have a competition for all of the assets in the world. But when you in a market, when you're in good market conditions, usually stock market that is going up, right? Because the risk on mode, people start buying shit like crypto from the pandemic checks. It was given by Biden. Oh, let's flip it on the market, mate. Let's buy some Bitcoin. But when the stock market doesn't perform well, when crypto doesn't perform well, investors going to look at, oh shit, inflation is going up. Where should I put my money, mate? They go into the brokerage firm or go into the bank and ask like, I don't know, I have 10 million. Where should I put it? Inflation is eating my money away. And suddenly the first thing they go, oh, buy some gold. That's good inflation hedging in it, mate. And yeah, I should buy some gold. But then, shit hits the fans and the Fed really has to tackle inflation. And what if inflation is going away? Then we don't really need gold to hedge inflation, right? And then the Fed starts increasing interest rate and suddenly, boom, 4% return on just a piece of paper that the government gives you, guarantees. Isn't it a good deal from an investor perspective? When you present free options for an investor, stock market, which is going down now, crypto, that is going down now, currencies, who the fuck knows what's going to happen, and all of these assets, and then you say, oh, there's government bonds as well, and he says like, okay, so governments, how likely is that the US government is going to default? Not likely, because they are too indebted, and they say, okay, I'm going to bet on the government. Boom, yields are going up. But if yields are going up, gold doesn't have any interest-bearing characteristic. It doesn't give you any return. So now everyone's going to sell off gold and buy, guaranteed 4%. That's how yields are working. And I hope you answered your question, Wally. Wasim.
Thomas, but the inflation rate is also plays a big role. Even if you get a 3% interest from the government bond, and then you still have the inflation going up and up again. So the delta is not really attractive, right?
Okay, can you define what's the delta?
Now, what's the inflation now? Right?
So,
and what we are getting. So the difference, if the difference is not that big, so people will be really eventually losing money out of this investment. No?
Delta is like regression. It's if the interest rate is going up by 0.1%, that's how much the yield should go up on the underlying asset. But it depends on, bonds are a little bit tricky because you have this inverse correlation between price and yield, but delta is actually measuring the change in something as compared to another thing, which is, again, is different to data. God, that was a long time ago. That was a tricky question, Marwan.
Okay.
I need to read up on this.
Skip it, no problem.
No, I'm interested.
I'm interested to know this too, because usually we just use delta in option. I didn't know that you can use delta in fixed income.
Yeah, you can. We used in the, when I had the portfolio, we measured the data for the bond market as well, because every how to say, so every percentage change, increase or decrease in the yields are affected the bond portfolio directly. So it wasn't even indirectly, it was directly affecting. So we had to measure the change, and the data was actually a monetary value, and it was a risk matrix for us that if, for example, interest rate or yields going up by this much %, that's how much money we lose every single day. And I will try to look up my portfolio that we used at the hedge fund. But basically delta you can use it even as stocks, but mainly beta that they use in stocks. Delta is options.
Yeah, mostly delta is option. Most of the time people just do, if it's just simple options, they would do delta hedge. But if you have a more complex portfolio, then sometimes they would do vega and theta hedge as well. So, but delta hedge is more common.
Yeah, but it's the same thing in fixed income, exactly the same thing, because it measures the price change as compared to something else.
Okay.
Cool. But maybe that's a more high-level discussion for next time.
Sure.
So the delta for bonds is still not good. And the bond yields are flattening because everyone's going on about the 2-year, the 10-year, and the 20-year yields, and they're all they're getting closer together. So people are raving on about the flattening of the yield curve, and that's meant to be a disaster. I'm not sure what that means, but a lot of people raving on about that on Twitter.
Right, I'm exhausted now. It's only an hour and 10 minutes that we're doing.
Because the market is not really moving, that's why. Gold is still in like $2-3 move.
Yeah, it's just waiting for tomorrow, I think.
Oh, damn right. So let's see. Ooh, almost 10,000 subscribers to the channel, ladies and gentlemen. Wow, wow.
Big profit.
Yeah. It's 160 subscribers away, on 150 from YouTube.
Congrats, man.
Thank you so much. All right.
That's another indication that you're not old-fashioned.
Maybe I'm doing something right if 10,000 people decide to follow me and watch me. And still, right now, the current thing is 465 people is watching the stream. That tells something. So Antonio Alia asking, what do you think about the 2 years daily trend line since March 2020 when COVID started? Because it literally there now can be related in all this, as you can see every time the market touched. I'm not even looking at trend lines right now because we have something bigger on the plate, which is the possibility of the 75 basis point rate hike, which in my opinion is not going to go ahead, but we will see tomorrow. And another question, how about DXY, man? Will be correction after high hit? If the Fed, and listen very, very carefully, guys, because if you're a big DXY trader, big DXY guru, I've seen many on YouTube, especially new traders are, you know, carrying DXY around like a bloody sword, swearing on it. If the Fed is increasing, really gonna go ahead with 75 basis point rate hike, the US dollar is gonna go to the moon. Because we talked about the yields on the government bonds. If the investors have just the yield on the 10 years is gonna reach 4%, then they have to exchange their euro, their yen, their whatever currency is into US dollar. That's going to create a demand for the US dollar. That's going to push US dollar to the moon.
Of course, the one sure thing, if it does push the dollar to the moon.
Alan, welcome back.
Euro's going to go to parity very quickly. Because there is a direct combination between, because of this 57%, part of the euro.
Yeah.
Because that's the only one you can definitely trade with the dollar, because that does follow the dollar fairly well. The other ones less so, because the other ones are, the three other main constituents are around about 10%, and the other two about 5%, whatever, thereabouts. As you said before, Swedish NOK, Swedish krona, not NOK, that's Norwegian, and Swiss, yeah. But yeah, that's the thing I would say about that, really.
Yeah, absolutely. And if you look at if the euro is represented 57% in the DXY, now we have to look up the interest rate parity. What is the return that the European Central Bank is offering?
It's pretty much zero. So.
Zero, de nada, zero, absolutely nothing. What is the US offering? Above 2%, 3%, almost 4% on some of the bonds. So where would people put their money? They would immediately exchange the shitty euro into US dollar.
Oh, absolutely. I mean, that's like I said, it's going to go to, if what you say happens, and it could well do. I don't disagree with your logic. Euro is going to go parity, or even worse.
And Lim Ri Bing is asking, where is Sophia? He wants to listen to her advice from her.
I'm here.
Hey!
Hey!
How's Jimmy doing?
Yeah, actually, where are they? Where's Jimmy? Where's B?
I bet they are together, B and Jimmy.
They're always missing together. Probably showering together, things like that, just hanging out.
Oh, no idea. I don't know.
Trust me, brother. Trust me.
So many people are actually, hold on. So see many questions on YouTube. Are we buying gold or selling gold? No, it's just don't do anything, mate. Just enjoy the discussion. It's not the best time to trade. Tomorrow is going to be more happenings. If you know why, then you know why.
Thomas, buy all in.
Thomas,
Oh, whoa, calm down, cowboys.
I'm so sorry. I'm sent you message. Please chat. Please teach.
Teach? Where did you message me?
Discord.
Discord? Where? Which channel? I hope I didn't.
Fuck.
Chẳng nào à.
Yoni, did you just have a massive spliff on the screen on live on YouTube, or is it a rolled cigarette?
No,
Sansoiri, what is your thoughts on smart money concept? Give me a smart money trader that's going to trade on this economic environment and is going to be profitable with drawing straight lines. That's hilarious. I guarantee that most of the Instagram traders are gonna hide tomorrow when ask them about how the yield's affecting gold market, ask them about what is monetary policy, ask them about anything that any financial concept. It doesn't have to be delta that even I couldn't understand now because I was caught off guard, but just ask them simple questions. How does the interest rate increase affecting money supply? It's simple. Just ask them, and I guarantee they won't be able to answer.
They don't only reply support and resistance.
Yeah, man.
That's what I wanted to say. All the YouTubes that do the cryptocurrencies, Bitcoin or Ethereum, I watch like 3, 4, 5 times a week, and all of them didn't saw the fall. Don't talk about the rates and nothing. Only technical. Just if you have a like a downtrend or something, buy on the dip, buy on the dip, buy on the dip. It's a good time to buy. I'm buying.
Smart money concept is only like they're going to draw a line on the chart. Pretty much that's it, and they're going to buy the previous low if they have an impulse candle that broke this anyway. So that's my opinion on smart money. We always start with macroeconomics first. I mean, come on. Which one was first? When there wasn't even charts on the financial markets, because monetary policy goes back to the it goes back thousands of years. How cities and governments and countries were built. Were they built on trend lines and smart money concept? No, they were built in monetary policy. They were built in that they had to fund the castles, the kings, the wars. If you go back to medieval ages, kings went to war. They wanted land, they wanted women, of course, but they wanted, money. If these wars costed money. Where did they get the money? By monetary policy. They just simply, instead of printing more money by the current monetary policy, what they did is they had the gold coins and just mixed the gold with copper, so they had a weaker quality gold coin, but they had more money. That's how they expanded the money supply. Okay? And when, during good times, when they ended the war and they had massive amounts of gold, they just brought it back and they had pure gold coins. So monetary policy was actually before any trend lines. Back in the 1940s, there wasn't even charts. Charts were developed, I think, in 50s maybe, or I don't even know. But back in the days, chalk boys in the stock market, they were writing the prices with chalk on a board. There was no chart. Anyway, I think I just opened a can of worms on YouTube because everyone mad. Some people say smart money is just a hype. Honestly, there's no need for technical traders to know any financial terminology. And yeah, it's, I think, we all have different point of views. I think, yes, I am a technical trader as well, but I start my analysis on in the macroeconomics, what I was studied at an actual university, and what I was working in finance. So if I had to start somewhere, I would always start what I was taught, and not, drawing trend lines. Technical analysis is only just the secondary confirmations after I built up my strategy. I would never, no, it's lie, because sometimes I do start with technical analysis, but, fundamentals are much, much stronger than technicals. But anyway, whatever makes you money, do it. If you just a technical trader and have no idea what is DXY and monetary policy, maybe don't trade the big events. but draw the trend lines. Nothing wrong with it. I've seen people making good money. If you're fundamental traders and don't believe in technicals, if it makes money, be my guest. If you just an indicator trader, be my guest. Just do it.
Yeah, I often think it's kind of strange why people ask what's your opinion about certain style, because first of all, I don't study every single style in the market. And the second thing is, if you make money using whatever you've learned, then go for it. Why do you care what other people's ideas? Because in the market, there are people that are using different things. If everyone trades the same thing, then where's the market?
Absolutely. Absolutely. I mean, who am I to tell that which one is better? There's no such thing as one is better than the other. Common sense, I think, it still is stronger than any trend lines. And when you talk about going out to the financial markets, finance theory and economics is stronger, but sometimes, I've seen the results of, for example, Milad's TMA strategy, which, by the way, is just only in our group because, we are special, that we are gifted that we have Milad, and it works like magic. I've seen people trading RSI, just only RSI, and they're making, thousands of pounds every month. Makes money? Do it, mate.
The only common thing is risk management between all,
Yeah.
As long as you manage your risks and make sure that you don't blow your account, and you have a certain method, that's fine.
I mean, just respect of what other people trade. Like, you don't have to ask their opinion. I mean, if you don't want to insult someone, or if you don't want to get upset when someone say something negative about it, just be careful of what you ask.
Yeah. One thing I can say, and to close down this discussion, whatever direction you choose in your trading career, learning the fundamentals of macro takes many years, and it's not impossible. You can always start reading a book. So as technicals takes years to master and practice. There are so many things out there, and I think the most important is that whatever makes you confident and comfortable making money and not losing your money, just rely on that one. Always train yourself. Never put all your money and all your trust in one single theory, tool, or strategy, because nothing works 100% on the market. In trading, nothing is guaranteed. Losses are built into this game. The only thing that a trader, he or she, can manage is risk management. Nothing else is guaranteed. You cannot control money supply. You cannot control trend lines. You cannot control the interest rate decisions. The only thing you can control is your risk. And I'm out. And that said, today I think gold is going to continue lower or higher, or maybe sideways, because tomorrow we have something called interest rate decision. So you might want to read up a few things about it. We discussed already with the team, but when is the interest rate tomorrow? It's going to be at 7 p.m. UK time. Anything in the afternoon? No. So tomorrow we won't trade in the afternoon. Team, we will see you tomorrow at 8 a.m. for the morning briefing, and we're going to have an in-house streaming of the interest rate decision, okay?
Okay.
Okay, thank you, Thomas.
All right.
Thank you, Thomas.
I wish you a relaxing
Thank you, Thomas.
evening.
Bye.
Don't risk all your
Thank
money.
you.
Wait for tomorrow, okay?
All right, thank you, Thomas. Have a blessed one.
Namita is giving signals. And you guys, if you want to watch the daily briefing, no signals, Namita?
No, I am here to pick my son.
Oh, you have a son.
Yes,
How old?
12 years.
12 years. So he can start trading by now. Very good.
He loves to watch you. When he get time, he watch your videos.
Hey, if he wants a free membership, just message me. I will give him one. Yeah, any kid will get a free one.
Okay, definitely.
You're welcome. Bye. So going back for the members, if you want to watch the morning briefing talking about how the Fed interest rate decision is going to affect the gold, the stock, and the currency markets, go to the website, learning portal, and the weekly webinars. Everything is there. And see you tomorrow at 8 a.m. and discuss the in-house streaming of the interest rate decision. So thank you so much. Stop sharing. Bye-bye. And people in YouTube, thank you so much for streaming in today or tuning in. I really enjoyed, and I hope you enjoyed the conversation. Now, today was more about the fundamentals and technicals. We discussed that how, you know, the Fed interest rate decision changed rapidly since last week. We talked about the US Treasury yields and what's going to happen with the US dollar and, you know, the interest rate, which is the most anticipated thing for this week because things have been changed fundamentally. Last time when the Fed increased the interest rate by 75 basis points was back in 1994. The last time when we had this high inflation was 50 years ago. So many things happening and you need to make sense out of it. But I do know how is it going to affect gold if the 75 basis point goes ahead. I know how is it going to affect if it's 50 basis point and how the stock market is going to react. So if you want to become a member, there's one membership left on the website. You have to go use the summer 50 goods. So all you have to do is copy this. There's one membership left. Go to the pro one, agree the terms, purchase, and click on purchase, and then add the discount code here, right here. Paste it, apply, boom, you get 50% off. I do morning briefing every single day. I do analysis every single day. I explain macroeconomics, technicals, fundamentals for the team, and I do live trading every single day. It's not a shitty course that you know, it's going to leave you alone. I do educate and teach people. So if you want, you can join. There's one membership left. See you on this other side. This is the Alpha Facts.
Trading is all about experience. It's to feel the adrenaline running through our veins. Like all the things we do that excite us. Whatever world we come from or live in, there are people that are born to succeed. They're called special, to hustle every day for an opportunity of a lifetime. Looking for the challenge to shape our future is something that's in our DNA. A privilege just available for a few. Traders, we see things differently, paying attention to every small detail that would maybe go unnoticed by the common eye. On or by the edge is our playground, with a constant strive for glory, seeking for a new tomorrow. Do you feel special? Take back control of your investments